Hey friends, Lucien here with the Bullish Bears team. Wanted to make this video on how to get started in penny stocks. The first thing that you want to do is open an account with a broker, right? Now, which broker do you choose? Because there are a ton of different brokers out there in the industry. And the thing is many of them have their benefits or their positives and negatives. So some of the ones that we recommend for penny stocks, again, there's not really a perfect broker. It all depends on what type of trading that you're going to be doing with penny stocks. Thinkorswim or TD Ameritrade, they have a fantastic platform, great customer service, really great virtual account. Now they're a bit higher with their fees, right? So let's take another step back. When you're going to do penny stocks trading, you're going to be doing day trading, right? Well, the thing is a lot of traders that get started, they want to try to avoid the Pdt rule, which is important, right? You want to be able to have, again, Pdt rule means you have to have at least $25,000 in an account to trade or to do day trading with being able to make unlimited day trades. If you're under $25,000 in an account, then you're limited to 3 day trades within a 5-day calendar. So, if you're looking to day trade and, make several trades a day, then you need at least 25,000 in your account with most brokers. CMEG is a great platform that allows you to avoid, or helps you basically to avoid, the Pdt rule. So you don't have to have that $25,000 minimum. So they're a great broker. If you want to avoid the Pdt rule, CMEG is a really good broker. Now, again, take a step back and really think about when you're day trading or trading in general. You need to know how to trade first before you go and start trading unlimited, right? So it's great to have unlimited trades, but if you don't know how to make 1 or 2 successful trades, then having unlimited trades is not necessarily a good thing. So we suggest people practice and know what they're doing first before they go crazy signing up and trying to avoid Pdt rule and making unlimited trades. If you're comfortable, you know what you're doing, then go with a broker, let's say like CMEG. We do suggest, again, if you open an account with TD Ameritrade, put $100 in it, at least get their platform, because they have a fantastic virtual platform to practice around with. We highly suggest making several hundred paper trades first. So again, if you're new to getting started, don't just try to go to a broker to avoid the Pdt rule so you can get unlimited trades if you've never practiced trading and have become a good paper trader first. It's so important to know what you're doing first before you go jumping into broker. So I want to kind of give that caveat, because a lot of people, when they get involved with day trading penny stocks, they just want to go and be able to make unlimited trades, but they don't know where to start first. So that's where we suggest, again, TD Ameritrade, great practice platform, as well as Interactive Brokers. They have also a really good virtual platform as well. So I'm not discouraging going with CMEG or a no Pdt broker. I just want to encourage you to get a good, solid virtual platform to practice in first. We are huge fans of Interactive Brokers and TD Ameritrade for their virtual platforms. They're very simple and easy to use. And again, if you go over to our website at bullishbears.com, we actually have a couple courses that we have right under here, our courses section, for both Thinkorswim and Interactive Brokers. Again, you can get started with them and practice. We wish just getting into trading is super simple. You can get in, make money all the time, and you never have to have a care in the world. But the reality is, trading is hard. It takes a lot of practice, and we want to set you up with the best tools. And Thinkorswim and Interactive Brokers both have fantastic virtual platforms to help you get started and practice. So the first thing we really want to suggest is really open up an account with a broker that's solid, and that has a very good virtual platform to practice in. So again, Thinkorswim, Interactive Brokers, there are so many companies out there. We just like them for their platforms and their charting. TD has fantastic charting, customer service, but their fees are a bit high. Interactive Brokers has a decent, their platform is decent. It's functional, it's workable. Their fees are actually really good. But, they have limitations. It's not, their platform isn't as great as Thinkorswim. So this is where there really isn't a perfect platform, right? But if, a lot of brokers, unfortunately, a lot of traders use multiple brokers, one for charting and one for trading. You'll find along the way that you got to kind of adjust and see which you like better, and each broker has their own positives and negatives. So when getting started, TD Ameritrade, as far as their charting and a practice and a virtual platform, they're just fantastic. But if you're looking to make unlimited day trades, not so great with their fees. But again, make sure you know how to trade first before you go crazy with brokers that have no Pdt Rule. But if you're comfortable, you're ready to get going, you know what you're doing, then CMEG is a really good broker with no Pdt Rule. Next thing you want to be aware of, and when you're getting started with penny stocks, is you want to be able to, or you need to know support and resistance. This is the key to trading in general, whether it's penny stocks or large cap stocks, doesn't matter. You need to know support and resistance, where to buy low and then sell high. So you want to buy low at support levels and sell high at resistance levels. And so, a lot of people get into the industry and they're like, let me just buy stocks. I'm going to buy and hold. Well, that's great if you want to buy and hold, but where are you going to buy? And how long are you going to hold for? And many new traders get in, they hold too long, they buy at resistance levels, and then the stock drops on them and they wonder why the heck it happens. Especially with penny stocks, they're notorious for pumping and dumping. And that's where we want to kind of put this word of caution out there, especially when trading these penny stocks. Again, a penny stock is technically any stock that's up to $3. Some people think of penny stocks as just under $1, but it really goes anywhere up to that $3 sector. And you'll see many pumpers that are out there, chat rooms, newsletter services, especially in sectors like Bitcoin and pot stocks. They pump and dump notoriously. Does it mean they're not going to be good long term? No. But remember, these are a highly traded sector. That's what a lot of people are highly traded sectors. A lot of new traders don't realize that, they're thinking of sectors like Bitcoin and pot stocks, and they're going to be great long term. But they don't understand and realize that they're very volatile sectors that are traded, right? They're traded daily many of times because of their high volatility. So there's a lot of money to be made in those sectors, but in there's also a lot of money to lose. And that's where the new traders get caught, because new traders are coming into these sectors and they're thinking, invest, right? Let me take my $10,000 or my $5,000 or my $20,000. Let me put it into this sector where I'm going to get rich, right? I'll put my money into Bitcoin. I'll put my money into pot stocks. I'm going to hold it for years and I'm going to get rich. The problem is, in sectors like, that are very volatile, like Bitcoin and pot stocks, they're traded, in and out by lots of day traders that know what they're doing. And anytime that you trade in volatile sectors, those stocks pump up and then they dump back down. And the problem is new traders get caught at tops, at peak resistance levels, and then they lose their money. So let me show you a couple examples of what that looks like. Now, float is something that controls the volatility of a stock. So the lower the float, the more volatile that the stock will be, where you'll get more of pumping and then more of dumping. The higher float doesn't mean it can't pump and dump. It's just a little bit less volatile typically. So that's where you'll see, right here, here's a tab on Thinkorswim called shares. This is shares outstanding. It's not float of a stock. It's actually a little bit higher than the float, but it's a really good gauge to go off of. So if you see 16 million, it's probably more than likely with Thinkorswim, it's going to be less. It might be 12 or 13 million float. So this is a really good gauge. So anything under 10 million is extremely low flow. Under 20 million would be low flow. And then as you start to go up 50, 60, 70 million, more medium flow. 100 million or more, typically higher flow. So the higher the float, up in these areas, the less pumping and dumping over 100 million, right? So let's take a look at a stock today like Dare. Dare is 94 cents. This is a penny stock. It was $35 at one point potentially. I'd have to go see if this is a reverse split. It could have been a reverse split. That's where a lot of people will get confused and they'll be like, oh, this stock was 35 dollars at one point. It could have been due to reverse splits and other factors, but you'll see typically a penny stock, or many of these penny stocks, you'll see this. It pumps up, dumps, pumps, dumps, and then pumps and dumps. But you can see these higher lows being formed, and almost many times looks like this big overall descending triangle. If you want to know about patterns, obviously we teach you that's patterns and candlesticks and how to trade them in our free candlesticks courses on our website. So again, this is not going to go into all the details of, what to look for when trading, but just to show you kind of what you'd be looking at is just patterns like this on a chart where the stock will get pumped up, and the problem is new traders buy at resistance levels. Again, you'll see this overextended level above RSI. This is a peak level where new traders get caught in the pump up. Price, traders, these chat rooms and services, they'll pump stocks up and then they sell them right back down. And new traders buy at these top peak levels rather than at support levels, which are near the base of moving average line. So this is why learning support and resistance is very important. Buy near support levels, near moving average lines, not when a stock gets way out here. Can you trade way out here intraday or daily? Yes. So this is where, this is a daily chart, but during this day, you could have traded a 1 minute or a potential 5 minute chart, depending on the setup, within this big green candlestick. But the problem is new traders, if you're getting started and you don't know support and resistance, the stock jumps up that day and they just buy because some chat room or services is telling them that it's running, and then they lose their money. So you see a stock like this goes up to $35, then it goes back down to $6, and now you can see today, where it is now, it was below $1. But many times these stocks, when they pump up over $1, these are great potential stocks to trade when a stock goes and breaks above $1, but you have to see the setup and how it works. And this is just to show you here, very notorious, where stock will gap up pre-market, goes way up to $1.25. Many times it'll take off and go, but then other times it just kind of dumps right back down, right? So this is kind of like what you'll see with penny stocks. Now, this is the pre-market, the shaded gray area. Obviously, you'd like to see a better pattern. If a stock can't go, this is what you want to look for when it gaps up pre-market. If you're bullish on it, you want to see it go and break above pre-market highs and continue. But many times the stock will just kind of fade and create lower highs right here. So you see at the open, it's creating lower highs and falling, and you can kind of see it's kind of a descending triangle. Well, no coincidence, kind of the same type of pattern right here on the daily charts. So penny stocks are notorious for doing this type of setup. Again, you can make really good money. This is where day traders are not. This is the thing to be very aware of. When you're trading penny stocks, day traders are all scanning and they're hunters of volatility. They're looking for these stocks that are breaking out. So they have scanners like Trade Ideas or their morning gap scanners, and they're seeing what's running that day. Typically, many a times when a stock breaks out like this, it's on news. So when they're looking for potential daily breakout stocks that are running in the pre-market, they're looking for the patterns to hold during the market open, and then they're looking to go in and scalp, scalp from $1 to $1.10, scalp 10 cents, 15 cents, stuff like that. So day traders are going in and they're trying to make money intraday or during the day, right? So they're looking to get in and to get out. The problem is many new traders come in and they look at penny stocks because they're cheap, right? They're very inexpensive. You can make good money on them. The problem is new traders are coming in. They're like, let me buy a stock when it's at 90 cents and it's breaking out. Let me buy it, or somewhere right in here. I'm going to buy it at $1.10 right here when the market opens, right? They have no clue that, again, pre-market's 125. So a new trader would come in. They'd be listening to a chat room service, right? So pretend it's pre-market right now and you're listening to me talk. I can say, hey guys, DARE is up at $1.25 in the pre-market. It's gapping up. They could think, oh, it's up to $1.25. Oh, this stock was $35. Let me go and buy it right now. Where they don't realize when the market opens, it's not breaking above pre-market high, they can say, I'm going to buy it right at open. And they buy it right here at open. It's $1.12, and then it's all the way back down to 90 something cents because they didn't know how to map out support and resistance levels and know these patterns, right? This is what we teach you in our community and in our courses. We have our day trade rooms, we have our courses. You have to know how to put all this stuff together and where to, again, buy at support, sell at resistance levels, be aware of pumpers, again, in sectors like pot stocks and Bitcoin. Again, you can make really good money, but you could also lose a lot of money. I like to use this example with Bitcoin a lot. Doesn't mean Bitcoin won't be good long term, but again, remember, a lot of people bought at $20,000 and it went down to $3,000. You have to be aware when the sector's moving back up. So now it's moving back up. There's a lot of hype lately about, Bitcoin might go and break 10,000 again. Well, we don't know if it will. Now, Bitcoin is starting to broach, overbought levels near $10,000. Very, very important resistance level. So if Bitcoin's going to continue to run, you want to see it get above $10,000, this resistance level, and then hold. And then look at the next resistance levels, right? See, these are the things that you want to look at when trading. You have to be able to map out support and resistance levels. If you just go and you hear a sector's running and you buy it, what if you bought way out here at 90 something $100 and it doesn't break 10,000 and it crashes down through, it fails support and then it falls all the way back down again? That's where you have to be very careful and why you don't want to listen to pumpers. You want to know how to do support and resistance levels, or no support and resistance in candlesticks and these patterns, so you know where to buy low and sell high. So again, in our community, we highly recommend trading penny stocks over investing. Investing is very risky with penny stocks because it's very difficult to find legitimate ones that are going to be good long term, and the charts don't really add up very well because many of them pump and dump. So can you make really good money trading penny stocks? Yes. But many times you got to be very lucky or have an insider information to be able to invest in them long term. So again, we also give you lots of resources on our website. Every single day we post a day trading watch list right here. Sometimes, depending on market conditions, we might not post one because we want to do our best to give you the best setups. So we give you a day trade watch list every night by 9 p.m. Eastern Standard Time. And then we also post trade ideas, gappers. Trade ideas is our favorite scanner of choice. In the morning by 9:15, we post the daily gappers here. And what will happen is every morning we kind of in our chat rooms and we go live and we do live streaming. We'll map out the gappers, see what's running pre-market, and then we'll kind of watch, weed our watch list and the trade ideas gappers down to a couple stocks we're going to watch and trade momentum at open. That's the daily process, right? You need to have your watch list, you need to be ready, you need to map out support and resistance pre-market, know these patterns and how to trade them. And again, you can practice. We highly recommend, open up a Thinkorswim or an Interactive Brokers platform or any platform that's a really good virtual platform to practice. So this is where we suggest coming in, taking our watch list, the trade ideas gappers that we post each day, open up your virtual account, get ready by 9:15 in the pre-market, watch us go live. So we do our live stream daily here. Come into our day trade room and watch us practice or watch us, show you live what to do, and you'll practice in your virtual account. So you can kind of put it all together because it takes making a couple hundred trades, practice trades, to really feel comfortable trading. So we give you the resources, but it's up to you to really implement them. And again, day trading, just like trading in general, takes time to learn. So hopefully this video helped you. Again, take our courses on our website, and we will see you in our community. Enjoy.